All right. Hey guys, hope everything's going well. You guys know that drill. Smash that like button, subscribe if you haven't, comment down below. All right. So the Bank of England flinched. And it's quite interesting that the pound was getting pretty banged up, right? I saw the other day the British pound was about 1.05. So basically, if you were to go to London with the US dollar, right? $1 would get you about what? Is it close to 95.95 pounds, right? Or £1 would get you $1.05. And I remember a time where £1 would get you about $2. And now it's like, wow. And I remember, like my family coming from India, you just remember that the British Empire used to be huge, and now it's obviously declined, and the country has gone down the tubes. And I think it was maybe during World War II. I used to do videos on this. Like £1 could get you $4 or something like that. It was crazy. And then you had Bretton Woods and all that. And you had the passing of the baton to the US dollar. So yeah, it's just really, really interesting. And I wonder, if it goes parity with the US dollar, I'm like, wow, times have changed. They have definitely changed. No doubt about that. So if you're looking at what happened today, the Bank of England, they flinched. They decided to buy a boatload of bonds. And why would they do this? Well, the rumor was I've been reading about this in few publications that their pensions were not solvent. Okay. And if they did not act, then you'd have a lot of problems. And I remember in 2020, the Fed chairman here in the US, Powell, he flinched. He decided to flood the system with ridiculous amounts of liquidity. So you had what? Interest rates go to basically 0%, short end. And now we've created a bunch of inflation. Some of it is because geopolitically, some of it's supply chain. And what is it? 3%. That's not that high interest rates historically for the Fed funds rate. But it's quite interesting now. Inflation expectations, in my opinion, are coming down because of the decrease in oil prices, the housing market taking a dip. Also, natural gas prices have come down. And you've seen the stock market taking a dip. Dollar index has gone up. 10-year yield hit 4% last night. So I'm thinking, wait a second. If the Bank of England just caved like this, what's going to take someone like Powell to cave? Because he caved in 2020. And if there are problems, I believe, like I've stated before, the Fed's going to reverse course or they're going to halt raising interest rates. In my opinion, that is going to help equities. That's going to help the precious metals. That's going to help the sports cards that I speculate in. That's going to help the crypto market, the whole 9 yards. And I expect maybe 18 to 20 months of positive returns for the S&P 500. We may have a bit more volatility, but the rally, in my opinion, is going to be 18 to 20 months. there's this reset that all these guys are talking about. That's why I'm not too bullish after 2024, sometime in the middle of 2024, some cycles that I'm looking at, some of the Elliott wave theory guys that I'm looking at. But right now, I'm bullish because I believe that central banks are going to reverse course. It started with the Bank of England. You saw the Bank of Japan intervening in the Forex markets the other day. So you're having all this going on. They don't want the shoes to come off. They're going to raise interest rates, or Powell's going to try to raise interest rates as much as he can without damaging the junk bond market, the other aspects of the economy. I mean, some of these companies are laying off people. And when the Fed sees that, they're going to be like, we got to stop raising rates because the system is addicted to cheap money. But once again, Bank of England caved. Other central banks are going to cave. And in my opinion, that is bullish, in my opinion, for equities, precious metals, etc. And I noticed that the 10-year yield went down, close to 20 basis points today. 10-year tips, which I look at closely because I follow collectibles market, that went down 20 basis points as well. So it is what it is. It looks like a time to be, for me, I can't tell you what to do, time to look at some assets, and hopefully 18 to 20 months, you see a decent return. But we shall see, guys and gals. Anyways, let me know what you think. Remember to smash that like button, subscribe if you haven't. Comment down below, guys. Thank you. Bye.